Good morning, everyone. On this windy Tuesday, the S&P 500 and NASDAQ were up for 8 straight days. This is the longest win streak so far this year, and the sharpest win streak in terms of percentage increase since 2003. This goes to show you that the stock market sell-off 2 weeks ago on fears of the lower than expected jobs and unemployment report number and the Japan carry trade unwinding was overdone. There was a lot of fear in the market, and it goes to show you, and as I thought, that was a buy the dip moment. And the market's rallied pretty substantially since then, and kind of rightfully so. We had better than expected economic data. I think we're at the top end of this trading range, and I think the market will probably trade sideways for a little while. But either way, I'm still very optimistic on where the markets will go, especially towards year end. I expect the 56 to 5,800 price target for the S&P 500 by year end. What makes me even more optimistic about this rally, though, is that it's not necessarily led by the big tech companies, the Magnificent Seven. It's not led by that. The S&P 500 minus the Magnificent Seven, the 493 companies, are actually hitting a new all-time high, as opposed to the market cap weighted S&P 500, which hasn't hit a new all-time high yet. So this goes to show you that this market rally is starting to broaden out. We had Goldman Sachs actually decrease their chances of recession. Yes, they rose their recession odds from 50% to 20% a little over a week ago to the lower than expected July jobs and unemployment report number. They rose it to 25%. But now they are dialing that back to 20% due to the better than expected jobless claims number and retail sales number. And John Hatzius, their chief economist, even says that it's likely that they'll go back to 15%. I kind of agree with that, and that's why the market has been rallying so sharply the past 2 weeks. We also had a stellar earnings report today from Palo Alto Networks. They issued strong guidance. They're doing a $500 million share repurchase, and the CEO is issuing a bundle package, trying to bundle a lot of different software packages together, and I think that'll be good for Palo Alto Networks. It's a pound the table a stock in cybersecurity, in my opinion, especially after all the issues we saw with CrowdStrike. I still like CrowdStrike, don't get me wrong. CrowdStrike and Palo Alto Networks are my two favorites. But after this earnings report, especially after CrowdStrike's issues a few weeks ago, Palo Alto Networks is my favorite, especially as seen with the stellar earnings report they gave. We have AMD also by ZT Systems for $4.9 billion. This will give AMD more data center capability to compete with NVIDIA for AI hardware and chips. AMD's MI400 chips are going to be huge, and I think going to be a really strong competitor to NVIDIA. So either way, this is good news for tech, good news for AI, and I think NVIDIA, yes, will have some competition. And then I also wanted to talk a little bit about Bitcoin. Excuse me. This recent trading range for Bitcoin's been trading between 49,000 to 72,000 for the past almost 6 months, and we had the halving a few months ago. And with all the demand from ETFs and stuff like that, I think right now Bitcoin's a coiled spring. It's like a beach ball being held underwater, and as soon as that selling pressure stops, I think Bitcoin's parabolic phase will happen. We no longer have selling pressure from Mt. Gox, the German government, or even the United States. And once that selling pressure subsides, which it kind of already has, in the days and weeks to come, I think Bitcoin will act like a coiled spring or a beach ball held underwater, and will go up pretty parabolically. And I still think it could be not only $100,000 by year end, but perhaps $150,000. Let's stay tuned. But in my opinion, yes, the stock market might be a little bit towards the top of its trading range right now, due to the fact how sharply it's risen over the last 2 weeks. But Bitcoin, in my opinion, is actually pretty undervalued right now. And the opportunity I see right now, honestly, is really in Bitcoin. I think it's been trading sideways for almost 6 months, and I think it's acting like a coiled spring. As I said, with less selling pressure and more demand, it should go up pretty parabolically, in my opinion. Obviously, let's see what happens. And one more news story I wanted to cover is that Google's IPO was 20 years ago yesterday. And Google went public at a $23 billion valuation, and now it's $2 trillion. That's a 7,000% return, much stronger than the S&P 500's about 300 to 400% return since then. This goes to show you the power of owning individual stocks, especially stocks in their early phases of growth that have massive tailwinds of growth and secular trends ahead of them. And getting into Google back then was a very smart idea, and it's even harder not to sell. Holding on is the most difficult part of that journey. But in my opinion, this goes to show you that it's still important to own individual stocks that you have high conviction in, perhaps in addition to just the S&P 500. I think it's a good way to complement your portfolio, and a 7,000% return in 20 years is pretty amazing. And we're seeing the power of Google today in terms of AI,